Here is the Doji candle, one of the most powerful candlestick pattern formations that most of the traders apply incorrectly. In this video, I will teach you the real meaning of Doji candle. I will teach you how to trade that, how to read that, and how to apply that properly. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. And let's start with the basics. Even though there are a lot of variations of a Doji candle, there is one single element that unites all these candles. A correct Doji candle should have the same opening and closing price, the same opening and closing level, so that this candle should have a very particular structure. And such a candle signifies the indecision. Such a candle signifies that the market participants found the equilibrium, that bulls and bears agree about current prices, and for that reason the market stopped growing or falling. And usually when newbie traders see a strong bullish movement and the formation of a doji, they usually consider that to be a very nice signal to short. And when the price is falling sharply and they see the doji, they think that it is a good signal to buy. But unfortunately, the things are a bit more complicated than that. And now let's check the real chart examples and let me show you what exactly is hidden behind the doji candle. The best way to grasp the meaning of a doji candle is to study that applying the multiple time frame analysis. So here on the left we have a doji candle that was formed on a dollar Swiss pair on a daily time frame, and on the right we have the hourly time frame. We can see the price action within that doji. We can see the price fluctuations within that exact day. And the first thing to note about that price action is that we opened right here. Yes, the day started right here. The market started to fluctuate, but we closed around the same level, right? And you can see that here, once that doji candle was formed, then the market dropped sharply and we saw a very strong bearish continuation. But if we study the candle here in details, we may spot right here a very important clue. As we already discussed, doji candle signifies the equilibrium. It signifies that the market participants found the price that is fair, and bulls and bears agree about current price so that the market starts consolidating. And here what we can spot is that within that day we formed a range, right? We formed a horizontal range and the price was perfectly respecting its boundaries. In order to properly trade the doji candle, you should monitor that exact range, and you should look for a breakout of one of its boundaries. Bearish breakout of the range gives you a very bearish signal, while a bullish breakout of the range will give you a very bullish signal. Let's study the examples. Let's study a very peculiar example. Here in Eurodollar, I spotted two doji candles, and you can see that here we got a very strong bullish wave, and then a doji was formed. But after that bullish rally continued. Here, looking lower, we have one more doji candle, and it was formed after a very strong bearish movement. And this time, after a formation of a doji, the market bounced. And here, in order to grasp why it happened, again we will apply the multiple time frame analysis. The upper chart right here gives us the price action inside the first doji, while the lower chart right here gives us the price action within the second doji. Checking the first doji and analyzing what happened within that exact day, applying the multiple time frame analysis, again what we can spot right here is the range. Again, traders, the market found the equilibrium. Yes, and the market participants temporarily were agree about current prices, and for that reason the market started to trade in sideways. But then, after some consolidation, the range was broken to the upside. You can see that then it was broken, and that was a trigger that bulls are still very strong and they are willing to push. And after that, a strong bullish movement initiated. Now, checking the second example and monitoring the price action within that exact day again. Here we got the range, yes, the horizontal range, and the market was stuck within that. And then you can see that after some fluctuations, the resistance of the range was broken. And that was the exact trigger, because after the breakout, we saw a strong bullish continuation. So now let's check more examples and let me show you how exactly you can trade that pattern. So here is a Doji candle that is spotted on a daily time frame on a dollar index. And here on the right is the price action inside that candle. In order to trade that candle, yes, you should monitor the intraday price action. Yes, you should monitor the hourly time frame. And here we see the range, right? And you should underline the boundaries of the range. Here goes the support of the range, and here goes the resistance of the range. And in order to grasp where the market will go next, you're waiting for a breakout. Yes, you are patiently waiting, and you can see that here the market violated the support of the range. And in order to confirm a breakout, you need an hourly candle close below that. Once the market closes below the support of the range, you can look for shorting. You set your sell limit order on a retest of a broken support of the range, and you set your stop loss above its resistance. How about the target? In order to identify the target, you should return back to a daily. And on a daily time frame, if you short the Doji, you should find the closest strong horizontal support. And if you buy the Doji, you should spot the closest strong resistance. If we are shorting, we need to find the closest support. Our closest support is right here. Yes, that section. And that will be our target. So returning back to an hourly time frame, we now know where's our target. Yes, our target strictly is that daily support that we spotted. Yes, so now you know your entry, you know your stop loss, and you know your target. And by the way, traders, watch this video until the end, because I will also share with you some useful tips about Doji. Now, here in gold, we have a very nice Doji candle on a daily time frame on a key support, and monitoring how the market was trading within that candle, we can spot the range. Here on an hourly time frame, the market was coiling. Yes, and here we got the resistance of the range, and here we got the support of that range. So the first step is to wait for a breakout. Yes, we are patiently waiting for a violation. And you can see that over here, with that strong hourly candle, the range was broken. So your task is then set your buy limit on a retest of a broken resistance of the range. Then your stop loss is lying below the lows of the range, below the support of the range, and where should be your target? As we discussed, traders, your target should be the closest strong resistance. And returning back to the daily, here is our closest strong resistance. So there is our target. So here, looking left on an hourly time frame, here should be our exact target level for the trade. So here would be a very perfect long trade based on a Doji candle and a multiple time frame analysis. Now about the trading tips. First, let me make some notes about the shape of a Doji candle. Even though in the books we see the perfect example where the opening and closing price of the Doji are exactly the same. And of course, occasionally we meet such candles. But remember that there are these slight deviations. And occasionally you can have a small body and still it would be the correct Doji. So remember, traders, that the markets are not perfect. Yes, and occasionally we will consider the candles with tiny bodies to be the correct Dojis as well. Now about the best time frame for trading Doji candle. And the fact is, traders, that you will see Doji candles on multiple time frames, on 15-minute chart, on weekly chart, on monthly chart, and daily chart. But for the strategy that I explained to you, the best time frame for trading is the daily. So I strictly recommend you to trade only the Doji candles that you spotted on a daily. If you spotted the Doji candles on lower time frames, you can apply them for analysis purposes only and not for trading. Lastly, I highly recommend you to trade Doji candles that are formed on key levels, on trend lines, or on horizontal structures. Here in New Zealand dollar, we have 2 Doji candles, and one Doji here we would trade and one we wouldn't. The Doji candle right here is perfect for our trading strategy. Why? Because it is lying on a key level. You can see that here on the left we have a key horizontal structure support, and that structure right here increases the probabilities that that Doji will give us a correct signal. The Doji candle that we see over here is formed on a random level, and that pattern we won't trade because quite often that candle will give us false signal. Alright, traders, I hope that you enjoyed this video. Let me know in the comment section if you have any questions, and let me know in the comment section what candlestick pattern do you want to learn in the next videos. Traders, if you want more education, if you want more tips, don't forget to subscribe to my free Telegram channel, the link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you soon. Thank you so much for watching.